UBS Managing Director, big wealth management guy, the biggest over there, Jason Katz, and Circle Squared Alternative Investment CEO, Jeff Sica. Jason, is it Apple? Apple is not the biggest drag today, but Apple is a main story here, not to mention the potential of CPI that really didn't come to pass to hammer the markets.
I'm not hearing programming.
Jason's not hearing. Let me throw that to Jeff Sica then. Jeff?
Yeah, I think, Liz, if you look at the reaction of the market, the CPI was heavily anticipated, obviously, you know, especially since we saw this big increase in oil prices and gasoline prices. I don't think that I don't think the market is really showing any panic necessarily. I think you're still hearing the chorus of interest rates flattening out. You're also hearing some people say that interest rates are going to go down. That might be a tall order, but I honestly think that the markets need to start to look at the consumer. The consumer's extremely important, and now that you've seen this increase from July and August on oil prices, we anticipate that the consumer's going to start reducing their spending.
Well, let me point out, yes, we have seen a huge run-up in oil prices, but oil was actually retreating today because there was a bigger than expected build in inventories for the week. So we put that aside for a second and go back to core CPI, core inflation, which excludes often volatile food and energy, up 0.3% month over month, up 4.3% year over year, compared to a gain of 4.7% in July. So coming down, but still well above the target, Jeff. And so that makes me wonder here, tomorrow we're getting retail sales for the month of August. Are you looking at, for example, the big apparel makers or perhaps the the chain store sales here and what they look like in deciding what to buy?
Yeah, I mean, Liz, it comes down to, when I look at the consumers, it comes down to wants and needs. And it also, for me, what's alarming is this credit card debt. This credit card debt is at the highest it's been in history. You're talking it's exceeding $1 trillion. So you have people spending money, but are they spending money on what they want, or are they spending money on what they need? And where are they getting the money? Are they using their credit cards? Are they taking money out of savings? I still think the consumer has been annihilated by the inflation, and I don't see it getting considerably better. So even though you see these numbers that might not show dramatic increases, and as you said, Liz, there's a compounding effect to take into account. You know, just because it's not what it was last month doesn't mean it's not still bad. So it is still bad.
Can I talk about the IPO market for a second here, Jeff?
Sure.
Instacart is sort of a moving target. We've just found out that Birkenstock is going to go public. It filed its S1. It's going to be valued, the shoe of preference for UC Santa Cruz students, Birkenstock, a $7 billion valuation. And of course, what is expected, what sources tell us to be a pricing tonight of ARM, the chip architecture company, huge name there. We're expecting that to be priced. It's very interesting to me how the market has done. We thought, well, let's check in and see some of the IPOs and how they've done this year. Two momentum names, Oddity and Kava, are actually, if we show you since they went public, not a pretty picture. They were big movers, Jeff, when they first came out. Kava, of course, the Mediterranean restaurant chain, and Oddity is the AI-driven makeup company. You look at these stocks since they went public. You've got Kava down 14% from its highs, and Oddity is not a pretty picture either. So do you look into that? Actually, Jason's good. Jason is good. Jason, we're talking about IPOs, about how ARM is expected to price after the bell today. That could be the biggest of the year. Some IPOs have not done well. Janelux, whom we hosted on Monday, the CEO was here, has done brilliantly. It's up more than 250%. Do you look at IPOs when your clients call and say, Liz, Jason, I want in? Do you tell them, get in? Or do you say, wait, because these things have to calm down and cool down a bit?
There's a disproportionate amount of cash on the sidelines, $4.5 trillion some odd dollars. And the capital markets have been really funky, and we're finally starting to see green shoots. I'm not going to characterize it as insatiable demand, but for the first time in recent memory, yes, we're getting those kind of queries from clients. There is an appetite, but at the right price. In this environment, when there's alternatives for your money, like 5.5% treasuries, that IPO better be priced for perfection.
Well, I had heard Silicon Valley smart people, no names, but had said, oh, oddity is huge. It is the smartest. It may very well be, but as a purchase of a stock, Jason. So when you spin it forward to something like ARM, which is expected to be a pretty big blue whale here for this year, will it be a Genelux, which has performed so well, or do you wait? How long? What sign do you look for before you say to your clients, okay, you can get in here?
I don't think there's any need at the open to buy any of these IPOs in this environment. I think you give it a few days to see the books settle and how markets trade, especially post the hotter CPI number, angst heading into the Fed meeting. I think you'll have ample time for the game to come to you, especially when it comes to the new issue market.
Jeff Sica, we're talking about the opportunities in this market. There's still very high valuation tech stocks that are too rich right now. What looks good to you?
I mean, Liz, it's been a challenge. I have to be honest with you. Like Jason was talking about the IPO market. The IPO market used to thrill me. Now, what I'm trying to buy, I'm looking at. I especially like these REITs that are selling these REITs, real estate investment trusts that are selling at a discount. A lot of these REITs are selling, companies like Avalon, they're selling at valuations that are less than what the total aggregate value is of the real estate within it. I would not touch, I own a lot of the technology stocks. I'm holding on to them, but most of them, like Apple, I think are priced to perfection. I wouldn't be chasing them at these levels. Right. So I'm being very selective.
And Jason, what are you recommending, real quick?
I'm looking at laggards like energy up only 4%. Energy is one of the reasons why inflation's elevated, so why not take advantage of that? I think 80 is the new 60 when it comes to oil. You have OPEC production cuts. You have a group trading at a 40% discount to the S&P, sporting high dividend yields, and all these major integrated oil companies are announcing buybacks. So I think there's ample opportunity in the energy space right here, right now.
Right here, right now. Little Jesus Jones action. That's his song. Great to see you, Jason, Jeff. Thank you very much.